Stocks on Wall Street and Friday's session mixed. The Dow sheds more than 270 points while the Nasdaq gained almost 100 points. All eyes on the Fed's decision on Wednesday. Asian markets opened mixed, mirroring Wall Street moves. The GIFT Nifty is indicating a lower start for our own Indian markets. Crude oil prices gain as investors assess the impact of Ukrainian drone attacks on Russian refineries. Gold prices stay near all-time highs as investors eye a Fed rate cut this time around. Retail inflation accelerates marginally in August, rises to over 2% after hitting a 8-year low in July, but comes below CNBC TV 18's estimates. Food prices continue to contract. Economists say doors open for RBI to cut rates by up to 50 basis points. SEBI chief confirms CNBC TV 18 Newsbreak, promises to circulate a consultation paper on longer tenure for derivatives. Market regulator also relaxes 25% public float rules for large IPOs, allowing life insurers and pension funds to participate in anchor books ahead of IPOs. Well, it's been 8 consecutive days of gains and the bulls will be hoping for no Monday morning blues this morning. Good morning in the Mumbai News Center. I'm Amakshi Doria and you're watching Power Breakfast. But first up, let's take a look at what the Asian markets are doing. Well, as we all know, Malaysian and the Japanese markets are closed for a holiday today. So, no cues coming out of there. But the Taiwanese index is down almost, 0.08%. So largely flat. Hang Seng is also not doing too well. Largely flat start is what we're seeing. On the flip side, when we look at the Kospi, that has managed to gain for the 10th consecutive day, and it is in fact managed to hit a record high as well for the Kospi. Other than that, the Taiwanese index is not doing too well, down almost 0.25%. The Hang Seng also, largely flat in trade. It's a mixed looking Asian screen for now. The GIFT Nifty will also come up for you on the screen. For now, it's a start in the red, a downtick of almost 35 points. So we'll wait by and see how this day pans out. But that's all the global market action we have for now. But how will all of these overnight cues impact our own Indian market? We have a research team joining in with how the trade setup looks like and the stocks that are likely to be in the news. First up, Hormaz joins in to get us all the market cues we need to watch out for in today's trading session. Good morning, Hormaz.
Good morning, Vamakshi. And after 8 days of gains, the bulls would be hoping for a 9th one. But the important thing to watch out for is going to be the exhaustion from the buyers that would come in at higher levels, and understandably so, after an 8-day rally. And it's what happened in Thursday and Friday as well, right? We managed to cross 25,000, 25,100, but then there is again some resistance that is creeping in on that August 21st swing high of 21,154, which is the most important level to watch. And what will comfort the bulls, of course, is the participation of the Nifty Bank, which did so last week, along with IT banks, and IT being the two important heavyweights for the market as well. And for the 8-day rally has meant that the base has shifted higher. Now, the last week low of 24,750 now becomes an important support level on the downside. And for the Nifty Bank, after this move that we have seen last week, the 55,000 level becomes a very important one for the index, simply because it has not managed to close above that level since the 25th of last month. So it's been almost 3 weeks since the Nifty Bank has stayed below that 55,000 mark. So it'll be an important level to watch on the upside. Of course, key factors to watch today, the announcements made by SEBI over the weekend with regards to the minimum public float, and so stocks related to that will be in focus. The multiple data points emerging from China, you just saw some flashes on your screen. The stock-specific news flow-driven stocks, of course, the reaction in such names has been very extreme as well. Any tariff-related developments, there are allotments for 3 IPOs today. That opens up, that could provide some refunds as well to the buyers, and we keep an eye out on any follow-up buying or selling in IT names, of course, and profit booking that continued in auto and FMCG names last week. And of course, defense stocks, of course, need to be kept an eye out for as well. So for now, it's a downtick that's the implied open is suggesting. Will be important to see what kind of support emerges at lower levels for the Nifty.
Well, thank you so much for that, Hormaz. Indeed, an action-packed week is what we're expecting. But over to Gaurav now, who will list out all the stocks to watch out for in today's trading session. Good morning, Gaurav.
Well, good morning. First, let's talk about Tata Tech. Now, this company has said that they will be strategically acquiring a company called U.S Tech Group, which is situated in Germany for a cost of around 75 million euros. Now, the company says that this deal is going to be EPS accretive, so definitely positive for Tata Tech. Other than that, some companies on the back of the order win. We've got Segal India. They have been announced as L1 bidder for one of the projects worth 510 crores. Railtel. Now, this company, usually we have seen this company reacts on the back of the order wins, and they have received LOA from State Project Director Bihar for an order worth 210 crores. Engineers India, now here also we are seeing an order win. Company has won an order worth 618 crores. This is actually an international order for project management and EPMC, and this will go on for 24 months. Other than that, from the pharma and hospitality pack, first let's talk about Apollo Hospitals. When we look at Apollo Hospital, they are going to acquire 31% stake, which is held by International Finance Corporation in Apollo Hospital Enterprise, in Apollo Hospital and Lifestyle, worth 1,254 crores. And other than that, they are also going to set up a comprehensive oncology center in Gurugram for a cost of over 500 crores. Alembic Pharma, here we saw US FDA concluded its inspection, and they have given establishment inspection report for the inspection. And lastly, let's also talk about Dr. Reddy's. Here also we saw US FDA concluded its inspection at one of the facilities in Hyderabad, and they have issued Form 483 with 5 observations. So definitely watching all these stocks in the day-to-day.
Thank you so much for that comprehensive list, Gaurav. And finally, we now have Sudarshan joining in with cues from the F&O space. Sudarshan, good morning. What are you watching out for?
Good morning, Mamakshi. So it's the penultimate day of weekly expiry. Tomorrow we have expiry for Nifty 50, but ahead of that, it's the eighth day of continued gain that Nifty has seen, and it's the biggest that we have seen in nearly 1 year. And as far as some of the F&O data, major data, what is that? First, all the major indices remain at the important levels. Sector rotation remains like in the focus. On Friday, we saw defense stocks saw huge buying and continuously buying being seen by NBFC stocks. And also over the last few sessions, we have seen that FI selling has come down. Now on Friday, the good part was the Nifty managed to hold on to levels above 25,100. But the important would be to watch out for if Nifty manages to cross the recent high of 25,154. That's very important level for Nifty. As far as Nifty Bank is concerned, it continues to trade in a narrow range unless Nifty Bank comes and plays a big part. It's very difficult for Nifty to move much higher, and it's a similar trend for Nifty IT stocks, because ahead of Fed meeting, all the IT stocks would be in focus, and there is an expectation of rate cut, but the important part would be what would be the quantum of rate cut. And now GIFT Nifty for today, it's indicating a start with a minor cut. On the flows front, after so many days, we have seen that both FIs and DIs were net buyers. On Friday, also in the cash market, we saw FIs buying more than rupees 130 crore, DIs more than rupees 1500 crore. And now net long position for FIs has improved to 12%. In the index futures too, they have bought almost 2,000 crore. Options data also indicate that Nifty might move further higher, and that's the reason call options were healthy and premium moving higher. Nifty levels support 24,900, resistance 25,150, and if we cross the next resistance comes around 25,219. For Nifty Bank, support is 54,600, resistance 55,150. And lastly, stocks in the focus. Two stocks that have been in the band, RBL Bank and OFSS. New in the band is HFCL, and apart from that, keep an eye on two stocks, BSE and Reliance Industries.
Well, thank you so much for that comprehensive roundup, Sudarshan. But moving on then, the board of market regulator SEBI met in Mumbai, and took some key decisions. Large IPOs will get more time to comply with the 25% minimum public shareholding norms. Now, companies with market capitalization between 50,000 to 1 lakh crore rupees will get 5 years instead of the current 3 years to comply with the rules. Now, companies with market capitalization above 1 lakh crores will get 10 years to comply if public shareholding at the time of listing is below the 15% mark. Now, in another key decision, life insurers and pension funds will now have more room to invest in the anchor book of IPOs. The anchor portion has been increased from to 40% from the current limit of 1/3. Now, of this, 1/3 will remain reserved for mutual funds, while the remaining portion will be reserved for life insurers and pension funds. And real estate investment trusts, or REITs, will be reclassified as equity from the current hybrid status for investments by mutual funds and specialized investment funds, but InvITs will remain classified as hybrid. Now, addressing the media, SEBI Chairman Tuhin Kanta Pandey confirmed the CNBC TV 18 newsbreak. When asked about futures and options, SEBI chief promised to regulate a consultation paper on longer tenure derivatives for public comments.
रोज़ की में हम अपना काम करें कि हम रोज़ यही बताते रहें कि आज हम नहीं बता रहे हैं, कल आएगा। आपको हम बताएंगे। हम जितना सेबी ट्रांसपेरेंटली मीडिया से बात करता है या भारत की जनता से बात करता है, उससे अधिक हम क्या करेंगे। हम हर चीज़ डिसीजन लाने से पहले हम कंसल्टेशन पेपर लाते हैं, उसमें भी हर प्रपोजल पे हम कमेंट लेते हैं, प्रपोजल वाइज लेते हैं, उसके बाद हम उसका अध्ययन करते हैं और फिर हम अपने रेगुलेशंस लाते हैं। तो हम सब तरह के फीडबैक लेते हुए काम करते हैं।
Well, that was the SEBI chairman confirming a CNBC TV 18 news break. But moving on then, another important economic data point, inflation has accelerated marginally in August by more than 2% after hitting a 8-year low in July. But this is still below the CNBC TV 18 estimates, which had predicted a rise of 2.2%. Now, largely prices have remained benign now for the last few months, but the RBI has warned of a spike in inflation by the end of this financial year. Food prices continue to contract. Food inflation has been shrinking for the last 3 months, but the pace of the contraction was slightly better in August. Vegetable prices remained under pressure, contracting by nearly 16%, but this was also slightly better than the 20% contraction we saw in July. Core inflation remains above the 4% mark. Well, on that note, let's slip into a very short break. Up next, we get you cues from Wall Street, so don't go anywhere. Welcome back. You're watching Power Breakfast on CNBC TV 18. Now, in the U.S. market, Nasdaq managed to round up Friday on an IT note as the index notched a perfect week of closing highs as investors expect the Federal Reserve to cut rates amid the weaker jobs data to go along with tame inflation. The Nasdaq managed to close 0.44% higher, led by a surge in Tesla shares, while the S&P 500 hovered around the flat line. Now, Dow Jones, meanwhile, closed with cuts of 0.6% after reaching record highs on Thursday. Let's also shift our focus to the Fed outcome, which is expected this week. Market is pricing in a rate cut from the central bank amid weak jobs data and tame inflation figures. Former Federal Reserve Vice Chairman Roger Ferguson believes a rate cut is pretty much cemented and says the real issue for the Fed is stagflation. Listen in.
No, I think the rate cut next week is pretty much cemented. I think the question is, how is the Fed going to communicate that it's staring at the most complex situation known as stagflation? Risks to both sides of the so-called dual mandate, I think, are moving in the wrong direction for them. So I think the real issue is not next week's likely 25 basis points, but what, if anything, can they signal about the future? And I think the markets are expecting maybe a bit of a campaign. I'm not sure the Fed is ready yet to commit to more than one cut, and then we'll wait and see.
Meanwhile, Citi Wealth's Kate Moore is keeping an eye on the market, pricing in Fed's rate cuts and what's ahead for the market. Listen in.
One of the things I've been really focused on is how much of the market is pricing in not one, not two, but 3 rate cuts into year end. And we're kind of priced for that continuation of policy easing. If we have any spikier, hotter, spicier inflation data, and the Fed has to sort of wait, recalibrate a little bit in the middle part of this fall, I think that could be a disappointment for some risk takers.
Right.
Well, let's slip into a very short break. Up next, we get you cues from the commodities market, so don't go anywhere. Well, thanks for staying tuned into Power Breakfast. Now, shifting focus, my colleague Abhimanyu spoke to Sona BLW's Managing Director Vivek Vikram Singh on the persisting rare earth magnet crisis, supply chain concerns, and on the pending free trade agreements with other countries. Listen in.
It's an ongoing crisis. 8th April is when the restrictions are put on heavy rare earth magnets. Now, the restrictions are still in place as of today. Nobody has got approvals. But the industry has rallied. We have developed magnets using heavy rare earth free magnets. But it doesn't solve all use cases. So still I would say 95% of ours is solved and 80% of, I would say, other motor makers. But as an industry, I still think we are far away. And it is not the most optimal solution from price or efficiency. So I hope better sense prevails, relationships get better, and this gets resolved soon.
But apart from relationships getting better, of course, supply chains and resilience in supply chains is something which has been a constant refrain, which has been cited by the government as well as the industry. Exactly. So moving ahead, what kind of plans with respect to capex, the long-term plans with respect to capex, with respect to expansion are being looked at in light of these recent crises which have been exposed?
I think the government's been very, very engaged with us as an industry on this issue. They understand the criticality. However, it will take 2 to 3 years to start a magnet making industry in India. I think not just India, other countries, U.S, Canada, Europe, everybody will have to pick this up so that this 94% concentration in one country, and I'm not saying it's China, any country which has 94% concentration of one thing is a high risk thing. I'd say the same thing applies to semiconductors. There is too much dependence on one country, Taiwan, and we cannot be certain. If we want to guarantee supply chains in such a volatile world, it should be much better distributed in pretty much every kind of country. And I hope India can put up a local magnet making industry. We are happy to support. We are one of the largest customers. We are happy to support people who do make it. We'll work with them as our supplier partners.
Moving ahead, what kind of capex plans is the company looking at? What kind of opportunities you feel can be encashed as India is discussing and is signing FTAs with several geographies, West Asia, US, Europe, several economies India is looking at for FTAs. What kind of opportunities you're looking at, and what are the kind of expansion plans in the next few quarters?
So, our long-term plans are pretty robust. I mean, on an average basis, you can take that we spend about 1,000 crores every 3 years. I don't think there is any reason for it to change. I am very optimistic about these FTAs, but the FTA with Europe in particular is the one that is the most interesting to us. Of course, second is the US-India BTA. These two are the ones, as an industry and as a company, that move the needle.
What are the prime asks from your side, from your company, and also from your sector from these FTAs which India is negotiating?
See, for auto component, we are very competitive and we are very confident. We might be a gentle people, but we are not weak. We can compete with anyone. I think we are okay with 0 for 0. We are happy for outsiders to come and compete. If we are talking about Europe or US, we are happy for them to send 0, give us 0. But we are also okay with slightly higher tariffs. Like, we are a very competitive industry. So there is no real specific ask because we are happy to say, take what you want. We are competitive.
My final two questions to you. What is the kind of industry outlook you're looking for the next few quarters? And also with respect to the current GST reduction, how do you look to pass on the benefits to other people in the value chain, across the value chain, to ensure that the market picks up, particularly in the industry you're working in?
So the intermediaries anyway have a full pass-through. So for us, it's not much of a change. The only positive, and I'll say this is a very robust and positive step, comes from end consumer demand. So if the car makers, truck makers, tractor makers sell more vehicles, we win. It is one of the rare industries in which everybody is actually very aligned with the goal. And I hope it will be a big positive boost. It is obviously still a little uncertain because there are other factors at play, overall economic growth, government spending, etc. But I think it should have a very positive impact on overall automotive demand.
Well, that was the management of Sona BLW. But moving on, let's also put the spotlight on the commodity space. And my colleague Manisha Gupta is joining in with all the updates from there. Good morning, Manisha. What are you watching out for?
Morning. I'm looking at, well, first of all, as everybody else is, the U.S. Fed meeting in this week. And ahead of that, we've seen some gains come back in case of precious metal prices. So if you look at gold, we are holding just around that 3650 of an all-time high that we saw in the previous week. If you look at the silver prices, a fresh 14-year highs on that. Even platinum prices have gained up, trading at a 9-week highs in the international markets there. Traders are pricing in 25 basis points of a rate cut for the month of September. But ahead of that, you also have the U.S. industrial production data that is in focus as well. And the U.S. China negotiations in Madrid that started on Sunday are keenly being watched as well. The market's also looking at the crude oil prices, where we saw more than 2% of gains in the previous week. There are now supply concerns coming back on surface, intensified Ukraine strikes on Russia energy infrastructure, where, remember, nearly 17 to 19% of Russian refineries already shut because of this, is adding to the premium in case of prices. U.S. also has reiterated calls for Europe to stop buying oil from Russia. In the meanwhile, you've seen the U.S. crude inventories gain in the previous week, and that perhaps is what is capping gains into the markets there.
Well, thank you so much for that, Manisha. Gold continues to trade at an all-time high. But moving on then, heavy rains batters part of Mumbai. The IMD has warned of moderate to intense spells of rain and thunderstorm accompanied with lightning and gusty winds reaching 40 to 50 kilometers per hour. The department has also issued an orange alert for Mumbai, Thane, Navi Mumbai and Pune till 10 a.m. Well, with that, that's all the action we have on this edition of Power Breakfast. We're leaving you with the Gift Nifty indicating a muted start for our own Indian markets. Don't go anywhere. The team of Bazaar takes the action forward.